Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick, Mitch Hotch with you this morning. Well, we wondered how long it would take, but it appears to have only taken a week or so. The short squeeze has become a long squeeze. So we'll start the show there, and we'll move on to other things throughout the show. We have some earnings to discuss. We want to talk. I want to talk DraftKings. SpaceX, no, Virgin Galactic is moving up this morning on a SpaceX headline, so we'll talk about that. Our guest today, new guest. We got a new one for you, Bill Harts. He is the former CEO of Modern Markets Initiative, and he's going to give us the other side of the payment for order flow argument and why that can be beneficial. It'll be at 8:35. We had Joe Saluzzi on yesterday, so we'll have Bill on to give us the other side of that argument at 8:35. Before I throw it to Joel, I want to remind you all, hit that like button wherever you're watching this, YouTube, Facebook, wherever. Hit like, hit subscribe, hit share. Joel, how's it going this morning? How you doing?
Doing well. Up, market's up. Buy the dip, a little bit of a sell-off on the close. Boom, they bought it almost off that 6 p.m. opening bell. Made a high 38.04. Not much up there. Thursday in the area of Thursday's close, but believe it or not, Friday's high 38.23.50. So that's a target on the upside. Crude busted out. Had those highs at 53.70. 4 or 5 of them took it out, man. Almost hit 55, 54.96 high. Traded up $1.32, 54.87. Gold down $20 at 18.43.90. Silver getting a lick in here. That's down almost 6%. A buck down $1.65, 27.55. And Bitcoin going the other way. That's up 3.4%, 35,155. That's up $1,100. Those are the futures, are what I'm talking about there, folks. And Triple D, I know, where are you buying that? Where are you getting long GameStop today?
No, thank you. Sorry. I know it looks like when you think, oh, it's $400 2 days ago, it's $139 today. What a deal. Is this the Kmart Blue Light special? Not for me, no, thank you. I think rallies to be sold in this. I've thought rallies to be sold the whole time, but obviously I never thought it could get up to $475 or wherever it got to the other day, $483. Wow. That's unbelievable. You know, just when you stop and think about what it did. And I mean, come back to reality here and really analyze, you know, what you've got to do as a trader and even as an investor. When your stocks are going up 200, 300, 400%, you got to ring the register. Mitch, I know you're in the background too, and you were saying the same thing this morning. I mean, you've got to take the profits or the market will eventually take them from you, especially on stocks that aren't doing even well. I mean, across the board. Let's just look at the carnage in the short squeeze stocks. And it's not a carnage for the shorts now. It's a carnage for the longs. Bed Bath & Beyond, high 4 days ago. $53.90 is $28.10. That's a 2-for-1 stock split. Except
show my
didn't
screen
get any
here.
More stock.
Show my screen
Bed Bath
real
&
quick.
Beyond.
Yeah, look at the monthly down there. Spencer, can you, or do I got to take it back? This was from last week. I just didn't put there in this morning. Is 5 years of losses gained back in a week sustainable? No. Anyways, go ahead, Triple D.
I'm trying just here.
All right, I'll take a look at the other stocks.
Yeah.
BlackBerry, that's coming in.
Sorry.
That's
You
down
got a little static.
$1.25.
I was trying to fix your static, Joel. I don't know if it's just you. Spencer, are you there in the background? Because Joel's coming in and out a bit.
Yeah,
Before we go through the whole show, Joel's mic's coming in and out. Am I clear, chat? Am I clear?
Yeah, no, you're clear. It only just started, but I'm listening to our broadcast.
Maybe just
and I
you
don't
might have
hear
to plug
it,
in your headset and unplug it. It just sounds like a loose connection, Joel. So
okay.
And anyways, we might as well fix that right
still,
off the hop
before
we go
staticky?
through a whole
No,
process.
Joel, you're good. You're good.
Okay,
Okay,
I think
we're good.
yeah. Okay, let's go.
So, okay, you got Bed Bath & Beyond. Obviously, we know there's like 60 stocks. You can just start pounding through them. The obvious ones. AMC is still holding up fairly well. You can say, what the hell are you talking about? It's $9. I mean, it got up to 20.36, and the pre-market that day was over 25. So it is off significantly, but we're still up quite a bit from the $5 breakout. So yesterday, it was the last one to fall. They were all falling. It tried to hold up. It kept trying to hold up, and eventually it started to come down too. And obviously today, it's just running for the hills. People are getting real losses here, and you feel bad for the people, who get caught up in this and they don't know. I mean, you get newer investors. I mean, when your stock shows up on Saturday Night Live as a joke, it's time to sell. That is, if there's ever a sign of a top, it's when your stock shows up on Saturday Night Live. And that's what they did. They had GameStop featured, and they were doing, obviously a fake interview with a GameStop representative there, a director or CEO. I didn't watch the segment, but I just got highlights of it.
No, he wasn't.
Did you watch it?
He wasn't. He was a trader, man. He was
had GameStop written on his thing.
Yeah, he was a trader.
I thought they were saying
no. He was just a guy.
So, anyways, and they were trying to ask him fundamental questions, and he's like, "They sell games, man." In stores.
Yeah, no, it was funny. It was good.
Yeah, but when your stock shows up in the mass media, it means everybody has bought. It means everybody has bought. Can the thing bounce? Eventually, nothing goes straight back down. But we all kind of knew when the dust settled that this thing was going to be significantly lower. Is it going back to $20? I don't think imminently. I think eventually, yes, but I don't think it's imminent here. Is it going back to $4? I've hated GameStop for a decade, so I'm not the person to
ask you, right?
On GameStop. So obviously I got this one dead wrong. I never thought the $4 GameStop, which I had pegged going to zero, eventually could go to 400. So maybe I'm not the person to ask on this one, but you just look through the carnage. You got to ring the register. When you have a gift from the market, a gift from the trading gods, like we had in so many stocks. I mean, Viacom. These are stocks that haven't been talked about in the main media, but it was a short squeeze from 45 to 60 on a media company that is still stuck doing billboards, and they're giving you $60. Take the money and run, man. So I had a few of these in my long-term portfolio, and I sold what I could. I sold SunPower, and I like the SunPower story still, but it was caught up in the squeeze as well. So you've seen, across the board. I sold my BlackBerry. You had to get out. I mean, BlackBerry just got silly. It got up to $28. It's $13. So most of these things are off significantly. Moral of the story, learning lesson for newer investors. You hold too long, you probably eventually give back a lot of the gains. And that's what they're seeing this morning.
All right. Yeah, BlackBerry's coming back down. You see the big candle there. I'll give you the pre-market low. I mean, at this point, you're low probably on that Kramer, when Kramer was talking about these stocks, it hit 1290. It's not far from that area. Do we have anything we're probably at yesterday's low as well. You're not quite through yesterday's low. That was 1273. Take a look at that. Below that, the only thing I can really give you is a pair of lows at $12. So that's going back to the 21st and 22nd. Spencer, you got it. You stopped yourself on this too. So
yeah. Oh yeah. You got to sell your peanuts.
You stopped your mom out.
Sell your peanuts while the circus is in town. Don't wait for the final act, because when they start cleaning up, there's not much left to sell. Sell Harlan Pine. Sell your peanuts while the circus.
I gotta track him down.
And the other thing is, like, who are you going to listen to? Are you going to listen to people on the internet saying saying hold, or are you going to do what's best for you? Do what's best for you.
Hold the line, like Kramer said last night. What is this, Braveheart? Kramer gave his analysis of GameStop, and we know, and he said, under all my fundamental scenarios, the highest price I can possibly get for GameStop in the best case scenario is 60. And he's like, I'm like the high guy on the street. He's like, if you're in GameStop, you got to sell it now. And that was when it was 185. So Kramer, we call you out sometimes with your bad calls. It was a good call last night, telling your viewers there to sell it at 185, because it's 133 here this morning. Is it going to get more bounces? There's going to be bounces. And when I'm in something, I'm usually selling into the bounces. Is it going back to 250? I don't think so. I think you might get a 150 bounce, a 160 bounce, but it's going to be tough now because now you've got major overhead supply. You've got the pain trade above. You have people who really thought this was going to $1,000 kind of looking, okay, well, I bought at 300. I think it's still going to 1,000, but I'm pretty spooked now. So you got an overhead supply issue here. But like we said, it's not just GameStop, it's all of them. And the smaller ones that weren't getting major press. I mean, look at SKT, Tanger Factory, another one, another short squeeze, $13 to 21, back to 14. Kroger, I mean, what's going on?
Kroger I didn't know Kroger moved like that.
They squeezed them in Kroger. $33 to $43. That's Kroger's biggest move probably ever. I mean, this is Kroger. It's a grocery store. Anyways, it's come all the way back down. It's given it all back. Maybe at 31, 32. I kind of like the fundamentals at 31, 32. So it's coming back in where value investors like myself might actually come in. But holy mackerel.
It'll be interesting to see if Warren dumped any.
You've got to dump into something.
I'm just wondering if he's that nimble, though. Well,
yeah, he has Kroger. I didn't even know that.
Yeah, he does.
Warren goes Krogering?
Yeah.
Yes.
And then Tootsie Roll. I mean, we talked about Tootsie Roll. I still can't understand why I had the 38% short interest, but $31 is when this party started. And in 4 days, it ran to $59 Tootsie Roll Pops and all the way back down to 35. So some are still up a little bit here, but the majority have given back over half of the gains in just a couple of trading sessions. So it's not pretty if you're stuck around this long here. And in certain stocks like Kroger, maybe eventually Kroger can start to catch a bit again because there is value. But stocks like GameStop that are 135, your value investors looking at that and saying no, and your Momo guys looking at that and saying no. And now you've got your Reddit guys saying oh no. So I don't know how this thing can get back to 300-400 again. But in this market, never say never, but if you're holding out for 300-400, I think you might be holding for a long time.
What's Swinky? Is that that's
its own stock.
Yeah.
Swinky Hostess, TWK.
What about what was that? What's the symbol? Was it SIEB, Muriel's Siebert?
Oh yeah, that little one.
Yeah,
look at that one.
Yeah,
that was another short squeeze. $3 to 19 and back to.
It went higher than that. It went
in the pre-market.
Yeah,
20. I see 28.20.
Yeah.
Holy mackerel, that is insane. All right, well, do you want to? Yep, you're right. Do you want to talk about some real stocks?
Let's go and talk real stocks for once.
Sure.
Here, because we've been talking
First
short
time
squeezes
in a
for a
week.
week. I know. We're going to get back to normalcy here, hopefully, after all of this. And you're obviously seeing buy the dip working for the overall market, which I was nervous. But obviously, we know, I've highlighted this relationship that there's a negative correlation between GameStop and SPY. We highlighted that almost a week and a half ago. And it's still working here today. GameStop down, market up. That continues to be the case. You had a lot of earnings. You've got a pile tonight, though. The big guns are coming out tonight with Amazon and Google and Chipotle. EA Match is reporting. FireEye's reporting. But this morning, we've already had a few here. Where do you want to go, Mr. Israel? I'll let you take the lead.
Yeah.
Alibaba.
Wait, did you have this Elon Musk thing behind you yesterday?
Yeah. No, I didn't. It's new.
Talk to us about this. Simpsons, Elon Musk. What's going on here? We got to take a little close look at this.
I'm just look. We have a lot of this crap around the office, and so I just grabbed it. We also have these Seinfeld characters. That the thing you can't see, right? That's that sideways one. I think that's Adam Sandler, but it doesn't look like him, so I don't really.
Oh, it definitely doesn't look like Adam Sandler.
No. That's the back of it. Not even
that's the most terrible.
That's the back of the thing.
Adam Sandler I've ever seen. The silhouette of Adam Sandler.
So I think what happened was a few months ago, Jason and Luke, there was like some sort of an auction at like a warehouse in Detroit, and they just like went and got a bunch of this crap. So
they loaded up.
Yeah. Anyway, okay. Alibaba reported this morning, and I believe the conference call is happening right now, so don't have any commentary on that. But the numbers are the EPS beat and their sales beat. Although I looked at the PR, and they said basically nothing about Ant Financial, and that's kind of all that really matters here. So I don't know how much these numbers really matter at all. I don't know what they're saying on the call. Maybe they're giving more color about Ant Financial and the restructuring of that. But until we get clarity on that, that's kind of all that really matters.
Full disclosure, I'm still long the half-size position, the long-term portfolio. Full disclosure, I'm still nervous about the position to a certain extent. But I mean, it's tough sledding here now. We've had the nice comeback from the lows when we thought Jack Ma might not be around in the world anymore, and we know he is. You got a lot of overhead supply. You got people who are caught. You got some bag holders, 265, 268, 280. So it's tough sledding to really get above this whole 265 area. That's where it needs to get, though. There is room if you get above 265, 267 to the 280 level, but then that's hard resistance too. So you start setting up the risk reward, and you're like, yeah, there's some better places for my money right now.
This is just a big area, just a huge area, and the reason is you guys know all my tricks by now. Guess what the 50% retracement of the move is from 319.32 to 211.23?
Sounds about $50 higher, so you're probably right in here.
265.27.
Yeah, big number.
Yeah,
50% work.
Yeah. Yeah, I mean, it blew through it the first day, right? It went to 269, stopped another whole number. I would keep a real close eye on this close today, 64.69. That was the close from yesterday, trading below it. Let's see if we can get green, take out that 65 and make a run at 69. I just kind of feel with it trading down right now that if you do get over that 65, it's going to be a little thicker than the day that, and actually it went to 71.30. So you've had, that's 271.30, 269.5, 265. You got a step down seller in there. We'll see what happens.
Do you want to hear how petty China's state media is? They published a list of China's greatest entrepreneurs, and Jack Ma was not on it.
Really?
That's not good news. He's not back in. He's not back in the good house with the CCP.
No, I know. No,
he was not on it.
Yeah, he was not on the list of China's greatest entrepreneurs. He's like the richest guy in the country. He's not on the list.
Where did you get that information from?
I have my sources.
Okay. All right.
Yeah.
All right. Let's go.
Okay.
Earnings parade.
Let's go to overwhelming here.
You said boring in the background.
That was Joel. That was Joel. We had UPS and we had Pfizer. So some major Dow components here.
Let's go to UPS.
Yeah, UPS earnings beat $2.86 versus a $2.14 estimate. Sales 24.9 versus $22.87 billion. So a beat for UPS. Probably to be expected in the holiday quarter, right?
Holiday quarter, still in a pandemic. I mean, we're in lockdown here in Ontario, and so it's obvious that UPS is probably going to beat numbers, but nothing's obvious to the simplistic market. And so if you just bought ahead of time saying UPS probably beats, you're rewarded. So, once again, earnings matters again. I like this. Earnings matter. So they were good earnings. Now you're coming in and buying it now. You got lots of overhead supply here too. 164, 165.
There you go.
I mean, I like the company from a fundamental basis. I still think we're not, going back to the original way anytime soon. We're all going to stores. The convenience of it. I just love the convenience of, buying my thing online. It shows up at my door. So that convenience factor is not going away either. So still like UPS, still like FedEx, long FedEx, full disclosure. But short term, it's a big pop. I mean, do you get some backing and filling, Joel?
You nailed the numbers on this one. Right now, the pre-market high stands at 163.80. I mean, boom, this 164 stick a sore thumb. It's actually 164.14. If you're fortunate enough to get through that, your next daily high comes in at 165.59. I mean, to me, after putting in a double bottom yesterday and the day before, people took a little shot on the earnings play, and they're getting there's 6, 7, 8 points out of it. I don't know. I'm not buying it. I'm not selling it. I'm not shorting it. I would just say, I think some of your bigger players are looking this 164 to 165 as a sell zone area. Just short term. Long term, who knows what's going on with FedEx, man? That thing, is this getting off the mat at all?
I think these are buying opportunities. Eventually, it's rallying this morning with the UPS, so I don't know if I'd buy it this morning. But I've been picking up some. There's been some good opportunities, Joel. Like we've talked about it, just in a lot of like the forgotten stocks.
They got hit.
Like I said, I bought some Lockheed Martin. I finally put General Motors back into my long-term portfolio. Am I buying it high? Yeah, but I think there's still a story here. So GameStop gave you an opportunity on some stocks, and Lockheed Martin obviously was the earnings to a certain extent as well. But all these stocks are forgotten. Who wants to be going and buying stocks that are giving you 3% yields and growing and value stocks when you're getting GameStop's going up 200% a day? Well, all of a sudden, some of these other stocks are starting to look a little bit more attractive. So I like FedEx down here. I mean, it's a value play. So I don't think it's going away. I'm long it still.
So trying to get off the mat, getting a little pop here. I mean, it's got to stop. That put it a double bottom too. So if you wanna, you got an area to lean on. They're later in the earnings season, so we'll see what happens with that one.
What about Pfizer here? You've got a divergence, right? Where Moderna has sort of came back. It has came back, and Pfizer really has not. So Pfizer's earnings, for whatever they're worth, were out this morning, and they missed on the EPS and they beat on their sales, but they did raise their EPS guidance for the year. Looks like they raised it by about 10 cents, $3 on the low end. Now it's $3.10, and sales guidance for the year was fine. But really just divergence between the two main COVID vaccine plays.
Well, look at Novavax. I mean, I did not see that move coming. What a breakout 2 days ago, and I'm not sure why. Why, is this all of a sudden doubled in 2 days, Spencer, Israel? NVAX there's always headlines.
Yep.
I mean, there's always headlines in Novavax. There are headlines every night, it seems like, because obviously these are the vaccines.
Because they announced some phase 3 data last week. This was in the UK. And apparently, while they announced that, Johnson & Johnson's similar announcement was disappointing. So people pointed to Novavax as being maybe a stronger candidate than Johnson & Johnson's.
Wow.
Let me see here.
That's an unbelievable move. That's a breakout and just gone, gap and go. And now, if you're short the thing, you're scrambling for sure. What's a short interest on that?
I was just going to say.
Are they hitting some shorts on this? I mean, I was bearish this at one time. I turned around and got bullish at the 90, but I haven't really talked about it much since. I'm going to check the short interest too.
300. If you want to target in this one, that was the high in.
No, it's over. It's 11. I got 11%. So there's a little bit of squeezing.
30020. That was your high in August of 2015. So once again, big move here. If you got a target up in this area, I would say over 300. If this thing gets over 300 and holds it on a close, it's got another leg in it. Longer it takes to get up to 300, take out 300. I mean, someone's going to be ringing the register on this thing. I don't know who it is. Trading up another.
These are big moves. I mean, I take when my stock doubles in 2 days, I usually take it. Again, I'm the person that obviously sells too soon, but 100% gainer in 2 days is pretty impressive. I'd be selling it, but that's me. Going back to Pfizer, I mean, nobody looks at Pfizer and thinks, okay, this is, the vaccine play. They look at Novavax and Moderna as a vaccine play. Now, even though Pfizer's maybe the biggest player in there, they're not, and it's so, diversified. They want the one-trick ponies on these vaccines. So they want the Modernas and the Novavax. They don't want the Pfizer. I'm long Pfizer in the long-term portfolio. I still think there's value here in Pfizer in the long-term portfolio. 4.34% dividend is, okay as well. It's at support. I don't mind it here, but it's not a favor.
Yeah, Pfizer.
It's not a favor. It's not a momentum trade.
What's the catalyst now?
That's it. What's the catalyst here to get it going? The catalyst was, back in November when we got the couple big pops.
Vaccine Monday. That was Vaccine Monday. It came back into this area. Down to 35, up at 37 now. But once again, you just talk about these moves here in late November, early December, when it went from 36 to 43, folks. So all these people that had been, it got up to that same area. Of course, it goes through it a little bit on the monthlies. But do you think the people that were focusing on 42, 24, and Dennis, I remember you citing huge institutional orders at those points.
Yeah,
hundreds of thousands of shares, and they chewed them up and they went through it. But
I do have some breaking vaccine news.
What do you got?
Yes.
This is from I'm reading from Axios here. Russia's Sputnik 5 vaccine. Remember them? Demonstrated a 92% efficacy against symptomatic cases of COVID-19, according to a peer-reviewed analysis of a large clinical trial.
And that's at least 1% better than anyone else, probably. 91, you got 91. We got 92. Back in the day, you get in the hood there, and we all got pools, and I'd have my pool temperature. My neighbor would say, my pool temperature is 88 degrees today, just because it was the heat of summer. Neither of us had pool heaters, just from, just going from natural weather. And I'd always say, mine's 89.
Oh, man.
Drive them nuts. Sputnik.
I can't swim in
we
that
got
water.
one better.
That's
we'll one up
way
you
too
here.
warm.
Sputnik 5.
Okay,
All
good
right.
for Russia. Good for the people of Russia.
Yeah,
They
I
look
gotta
like they got
maybe.
that's good news.
All right. As far as like other earnings from this morning, it's it's just like Exxon and BP, not super interesting. Harley Davidson reported. Can we talk Chipotle though? Because this one is at an all-time high. Joel and I discussed this at the closing show yesterday. I couldn't believe my eyes. I still can't really that the stock has come back the way it has.
It's a story that doesn't go away. Its valuation doesn't matter. I mean, and they don't worry about E. coli there anymore. It's forgotten. So
that's so long ago.
That was like 3 years ago.
That's what I mean. So you don't have to worry about that either. So it's off to the races. I mean, this stock's sitting up here. Whatever happens with the earnings, I will tell you, if it didn't have an earnings report, if it did not have an earnings report here, I would say this is looking like it's ready to break out. Like you have been sitting up here, don't you think, all bunching up here, Joel? But the problem is you got fundamental information. We have fundamental information coming out. Technicals take a backseat. Yes, fundamentals matter here again. I'm unburying them officially today. I buried it with a nail in the coffin there last week. Well, I'm taking the nail out of the coffin and bringing some fundamentals back. But, I mean, just from a technical basis, this looks like it's ready to break out. Could you get a pre-earnings run here today? I think you could. I think you could see a pre-earnings run here of 20, 30 points. It would not surprise me. I never have the guts to take them through the report on a technical trade, but man, chart looks good.
Yeah, breaking out yesterday. The high is probably up there. If you want a target, short-term target today, 15, 16, 69. That was your high yesterday. Your all-time high, and another number. You guys always like. I like the all-time closing high, and I guess right now that's where the Bulls and Bears are squaring off. 1509.02. That was the high from yesterday. I mean, this thing. The other thing, the only reason I wouldn't be short to stock too, and you could really get a juice. I don't know why. What if they split this thing?
Oh man, we remember the split trade. We forgot all about. Great call, Joel. We forgot all about the split trade. Remember? No, Tesla split, and then Apple split, and anything that splits, and then you had NEE, and then that topped it out. When they bought NEE, Nextera Energy up like 30 points because it was splitting. That was the top of the split trade. It lasted for about a week. It was exciting, or 2 weeks. I mean, that could start up again. You're right, Joel. Imagine they announced a 5-for-1 stock split. I got burned on that. Remember on Apple back in the day, like 3-4 years ago, and I had the straddle writ. And I'm like, and they halt the stock for the earnings, and they say the earnings like, oh, those are pretty good. This isn't good for my straddle. And then they announced a 7-for-1 stock split, and I was like, I'm dead. I'm dead. So great call. I mean, that could happen. So,
I remember you. I remember what you.
But there's possibility. So I
remember what you did on that. You just covered it on the open. You just
eat it. You move on and eat it. Lucky I did. It just kept going since then. That would have been Apple probably back at like $30 or $40, $135. Eat the loss.
I think that's the last time you sold a straddle.
Yeah, last time I sold a straddle. It was a great strategy. Like I said, my buddy Bruce does it all the time on Amazon. He's been writing it in, but I'm too spooked. The first time I'll do it, they'll know. Yeah, I'll do it on Amazon. I'll rate the straddle. Then Amazon will announce a 10-for-1 stock split. I'll be like, ah! That's what happens.
They could do it too. Yeah, they could do it too. All right, 829. Not much going on in the S&P futures. Just hanging. I mean, up 30 handles. So that's a lot going on. Gain. Yeah, no, I mean, the spoos are kind of quiet. I'm really upset about this silver going down. I just hope they could have stayed up there for a couple more days.
Joel wants to get rid of his silver coins. Get rid of Grandma's silver coins. I got to sell these things.
I know. I was like,
you could have hedged your. Why didn't you just short it? I
should have.
You short the SLV, you hedge out your silver coin, your what you got physically
you're
there.
always thinking. You're always one step ahead.
Hedge.
All right, a few more earnings reports
Looking for the
here.
Hedge.
That's a good one.
Sorry, I just made that up. That was bad.
That's a good one.
Let's talk space here. SPCE.
I want to show you something. Just because of space today, I wore my space shirt. Look at this.
Wait. What does that say?
Oh, wait a second.
You're kind of low, Dennis.
We had 9 planets. Yeah.
Back in my day, we had 9 planets. Yes, we did. Now we only have 8 because they got rid of Pluto.
They did.
Pluto's still a planet. When they looked and sent that probe there, that sure looks like a planet to me.
Not anymore.
I look like a planet to me, so I'm challenging that. All those pictures, that sure look like a planet. Anyways, we only got 8 planets. But space, maybe they're going to take us there. So it's funny. You always talk about this, Spencer. SpaceX gets the headline, and then space rips on it because there's so many investors, I think, that think SpaceX or space. Anyways, what's the headline?
No, the headline. So there's a couple things. One, SpaceX had a PR yesterday morning where they gave an update on their timeline for sending people to space and doing more. Remember, they had that test that failed in December where the engine didn't start or whatever. So they're doing another test in February. But also that was yesterday. This morning, SpaceX basically just came out and said that they're going with their all civilian crew, their first mission later this year. So
this stock was benefiting from short squeezes as well. It's still going. That and Fubo. You know why? Because they got a little bit of the story still. I'm still long SPCE, full disclosure. I don't know where. I've liked this thing. I've been in and out of it since $16. I'm in, I'm out, I'm in, I'm out. And I'm in it. The last purchase I bought was $35. It has benefited from the short squeeze, so it's way overbought right now. I'm not coming in and saying buy it right now, but there's still a story here. I don't think the story is going away anytime soon, so that's why I'm still holding a piece. I have sold part of the position, though.
I wouldn't even think about the pre-market high here. Right at 4 a.m., they cut this thing up to 62.90. Instead, I would.
Wow.
Yeah.
Those 4 a.m. traders, they get crazy.
Yeah.
They get crazy with the cheese whiz sometimes.
Get crazy with the cheese whiz? Did you just make that up?
No, I didn't. It's from Beck.
From what
Back
movie?
in the day. Loser.
Oh,
the song. Get crazy.
We haven't
with
even
the
talked
cheese whiz.
movies at all. We've been so busy talking about all this other stuff. 59. I'd focus on this 59.43. That was a high back from a few days ago. It hasn't taken that out. And boom, that closed from yesterday. Ways to go there, but I wouldn't get too worried about it until it breaches that close 53.79. Yesterday's high.
Now interestingly enough, we've been talking about how the market doesn't seem to care when Cathie Wood or when Ark Invest sells a stock because she sold some space, some Virgin Galactic yesterday. Don't really care about that. But what she bought, they do care about. She bought DraftKings. She bought 620,000 shares of DraftKings for the ARKW fund, which I own, full disclosure. And DraftKings is up this morning.
You know you're back in normal markets when the Cathie trade is back. That's what somebody was tweeting at me last night because last week the Cathie trade, we said it wasn't working. She bought a whole bunch of stocks and none of them went up. And I was like, what kind of market are we in when Cathie Woods buys a stock and it doesn't go higher? We're back to normal. It's in DraftKings up 6% this morning. Thanks to her friend Cathie. Wow. Big pop. I mean, this wanted a catalyst, Joel, though. Let's talk DraftKings, DKNG. I'm not long it. It wanted a catalyst, though. It's been sitting in consolidation station for a bit. Does Cathie kickstart this thing to 65? I'm asking. I'm not telling. I'm asking.
Let's get through the pre-market high, 59.50, and then anything's possible. That's what I'm looking at. And also, last month's high, you're above that, but let's get to 59.50. It's a big pop. I mean, a lot of times these things get the pop, and then they kind of, as the late buyers come into it, they kind of roll over. But I'd use a 59.50. If it gets right up there, takes it out, goes 60, hold 60 bid for keeps going up, then yeah. But if it doesn't get to 59.50, I would say maybe peel back a little bit.
All right.
8:30, 8:34. Actually, it's 8:35 now. Smash that like button again on YouTube. We appreciate that. That helps more people find the show there. I'm prompting you with the little words up on the screen. Smash that like. All right, let's bring on our new guest joining us today, Bill Harts. He is the former CEO of Modern Markets Initiative, joining us now on Pre-Market Prep as I bring him on. Bill, good morning.
Good morning. Thanks for having me on, guys. Appreciate it.
So, Bill, yesterday, well, not just yesterday, but for the past couple weeks, we've been talking about this GameStop story. We had a guest on yesterday talking about payment for order flow and how that messes with the natural order of things. You are taking the other side of that position, correct?
Yes. What I'd like to do is talk about some of the advantages of payment for order flow, things that are sort of getting passed over in the discussion.
Let's do it.
Yeah. Okay. So, first of all, let's start with a little bit of terminology. Instead of calling it payment for order flow, I actually like to refer to it as incentives for order flow. And the reason is because a lot of people don't realize there's more than just hard cash payment going on here that incents brokers to route order flow. And by the way, the SEC has been aware of them. They've been studying them for at least 30 years that I can remember. It's not just market makers. Exchanges also pay for order flow, although they generically call them rebates and things like that. But the SEC a long time ago decided that these payments could actually be beneficial for investors. And so what they decided was, as long as there's proper disclosure of the payments, that they would allow them and basically they flourished in the time since then. So, yeah, go ahead.
I was going to say, there's been papers written, Robert Patilio, that brokers are basically routing orders to where they can get paid the most. That was a famous paper coming out from Notre Dame professor Robert Patilio, got to be 6 or 7 years ago here now, and that obviously got some media attention as well. What are your thoughts here? Are brokers just going and taking your orders to where they get paid the most, or are they still trying to get best execution?
So Robert is a highly respected professor who has looked at this stuff for a long time. I think the data he was using was the paper came out 7 years ago. The data was even older than that. And I think the industry has matured quite a bit in the last 10 years. And so when I hear people maligning payment for order flow, which of course is a direct cash incentive, I always ask the question, compared to what? Are you comparing it to the quote unquote, the good old days? Because I'll tell you what, in the old days, the money that funds today's PFOF, payment for order flow, mostly went into the pockets of specialists and market makers, not to investors. And whereas today, it's actually returned to investors either through zero commissions, or some brokers now are even sharing back some of those payments to the investors. And of course, price improvement, which I'll talk about in a minute. I don't think anybody wants to go back to those old days. So that's sort of one thing that people should be asking themselves about this. The market's clearly evolved a lot, and investors are generally better off.
I'm sorry, Dennis,
I was just staying on that same topic there.
Yeah.
And I see Bill's, some of the other side as well. I've talked payment for order flow, on this show for 7 years, but I've talked with regulators for a decade as well. I've been, of the impression, that it does increase toxicity in the markets, and we're not going to get into all that stuff here this morning because I've talked about that stuff before. We just want to try to give you the full view of it all, because one thing I will say, and I've written stuff on this as well, it's not really fair for a retail broker to be forced to put everything onto the exchange when they have to pay these fees. Because when you take the offer, on an exchange, that's obviously providing, that order, that there's a cost to that. And so if you're a retail broker and you're sending a 10,000 share order into the open market and there's a 0.3 cents access fee to lift that offer, well, they lose money on that order. So, when you go back, can you really eliminate payment for order flow on the brokerage side if you don't eliminate it on the exchange side? It's like I've said no. I think if the exchanges want to eliminate the retail payment for order flow to off exchange market makers, I think they've got to look at a scenario where they eliminate access fees and rebates then as well.
It's a great point. I mean, a lot of people don't realize that exchanges pricing structure is generally what's known as maker taker, which means that they'll charge a market order, let's say 30 mils per share, but they'll rebate to the opposing limit order, let's say 25 mils per share. So that, what they're obviously trying to do there is incent people to put their limit orders on the exchange, and that's an incentive. So you're right. We need to think about that in the same breath as hard cash PFOF for market makers. But let me just say this. Mm-hmm. I think investors really need to ask themselves, what kind of execution quality am I getting when my orders are routed to a market maker? And you sort of brought this up earlier by saying, are brokers just routing based on the amount of PFOF they get and so on? The answer is no. I mean, the first thing that you have to think about is that wholesale market makers generally give execution, well, absolutely, I shouldn't even say generally. They absolutely give execution at or better than the national best bidder offer. Your order will not do worse if you had sent it to than if you had sent it to an exchange. Period. You can't. It absolutely cannot happen. But then I tell people, well, actually, you can do better than you can do on an exchange, and that's when we start talking about this issue of price improvement. So here's a couple of statistics. So for the first 11 months of 2020, which is when the data is available, wholesale market makers paid out $3.3 billion with a B dollars in price improvement, meaning the investor got a better execution price than the NBBO, the National Best Bidder Order. In fact, Virtu, which is one of the premier firms in this space, alone paid out $1.3 billion during that same time period. So that's money that goes directly into the pocket of investors, and no exchange comes close. There are other things that market makers do that people really don't think about. For instance, most of them fill up to 10,000 shares in every ticker, regardless of how many shares are showing in the National Best Bidder offer. So if the displayed bid is for 100 shares, you can actually sell up to 10,000 shares at that price if your order is going to a market maker. So I guess maybe the question should be, why wouldn't you want to send the flow to a wholesaler? And in fact, if some brokers, as I'm hearing lately, are starting to say, well, we're just going to send all our order flow to an exchange, I think it's debatable whether they'd actually be fulfilling their best execution obligations.
So Bill, here's what I've always thought is, look, there are different people in the market and different things affect those parties differently. Like, I am a retail investor. Do I really care if somebody jumps me in the queue and gets my best price and I get a slightly worse price, and in exchange for that, I don't pay a commission? Like, do I really care about that?
If you weren't even getting a better price, he's saying.
Right. So, I mean, I think you have to start by saying it's not clear to me that anyone's getting a worse price from having, a worse queue position or something like that. But what I would say to your question is, where you stand depends on where you sit. So, yeah. So if you're a big institution, sure, and what you're trying to do is move 100,000 shares without letting the market know what you're doing, sure, you've got a whole different set of problems, right, than a regional investor who's doing 400 or 500 shares. And you really have to look at it through that lens.
Yeah. One thing I just want to add, and I'll just give you the color on the other side, and this is what I've argued for years, is that, and if you're putting your bid out there, if you're a market order trader, you're probably doing just fine in this environment. But if you're a limit order trader, you will miss fills because of payment for order flow. And I know, because I miss a pile of them because I'm a limit order trader. You throw out your 51, that market maker isn't doing the price improvement just, to give away $3 billion. They're doing it because they get to the top of the queue. So you bid 51 on the exchange, they can match your price or give a slightly better price, but your bid of $51 does not get filled. So there is an opportunity cost to limit order traders that doesn't feed into the calculation. I've argued for years that I bet you if you add up that opportunity cost, it would be significantly higher than $3 billion, or these off-exchange market makers wouldn't be doing this.
Well, look, no one is saying that market making is a charitable business. Let's face it, we're all here to make money, right? And so are market makers, right? So you really have to think what happens to those profits. And what's clear is that the way that things are structured today with payment for order flow, a good chunk of those profits is going back to the broker and back to the investor.
What obligation do the brokers have then? Because I was always under the impression that Robinhood was like pretty transparent, but I guess I was wrong because they got fined last year by the SEC for not being as transparent with their customers about payment for order flow. So, like, I guess what obligation do they have?
Look, I don't want to talk about any broker specifically, and I'm sure Robinhood had their reasons for settling that case. But I would point out that it was about disclosure and not about about someone not getting the best price, right? And so that's an important distinction, right? If you're an investor, really what you care about is best price. Yes, the disclosure is very important, and I think they've basically cleaned up that part of their website since then. But those things happen. So
let's take the conversation away. Finish your point, and then I was going to take it away from that. So yeah.
Well, what I was going to say was that one thing that the SEC has done, which I think is great, is they've really mandated a lot of disclosure. They came up with, and this goes back a long way. They came up with these reports that are today known by the snappy names of the 605 and 606 reports. And so what these reports do is they really list out for every single broker and every single market, exchanges, dark pools, et cetera, they list out what the actual statistics are. And anyone can go look at it. They're free. You can ask your broker, where they are on the website and so on. And you can really make your own decision. I mean, it's not for the faint of heart. You really have to, put some work into it to understand what they're portraying in these reports. But don't take my word for it. Look at the reports yourself.
So let's take this conversation over to something that you want to talk about too. Was everybody is talking about naked short selling, and there's this media attention going around that it's just the Wild West and everybody's doing naked short sales. We've addressed this issue on the show over the last couple of weeks, and I'm as a prop trader know if I'm doing a naked short sell, I'm getting fined significantly and possibly going to jail. I dot the I's and cross the T's on the locates, and I bet you most of the other prop firms are doing the same thing out there. But it brings to the question of GameStop, because everybody comes back at me and says, well, how then is GameStop short interest 130% if there's not naked short sales? And you're telling me that there could be another answer.
Yeah, I think there's a lot of confusion about this, and hopefully I can clear it up somewhat. The reason that you often see in certain stocks short interest of greater than 100% has to do with something called rehypothecation of stock. And what that means is, let me explain it with maybe a quick example.
Sure.
As most people watching know, to sell stock, first you go out and borrow it from someone, and then you go out into the market and you sell it. So let's say you just sold short 100 shares by following that process. And when you do that, your broker reports that its customer is short 100 shares. So far, so good. But this is what's important to understand. The person who bought those 100 shares from you doesn't know that you sold short. That information, it doesn't appear on any of the execution or clearing messages that the broker receives. So the buyer naturally assumes he owns it free and clear. And once it's in his account, it then becomes available to lend out to a short seller again.
Right.
And so what happens if your buyer then lends that stock out and it's sold short again? Well, that broker also reports that its customer is short 100 shares. And so the stats now are going to show short interest of 200 shares when it's really the same 100 shares that were sold twice.
Okay, but that chain can't go on forever, right? It can only go on that extra loop.
No, actually, it could go on again and again and again. And
really? Wait, for real?
Let me just point out. So there have been times when there have been some ETFs, for example, that have reported short interest of more than 1,000%.
Wait. Hold on. You just blew my mind. That chain
this is awesome.
Wait. I always thought that the chain can only go on you can lend shares at one time.
No, because think about it. The buyer, in each time, the buyer has no idea that the stock was short in the first place. So the buyer has every right to relend it if he wants.
So all of these, and looking at this and it's saying, oh, it's the Wild West and it's all the evil hedge funds that are doing naked shorting here. This is your answer right here. It makes complete sense. I mean, you can't, and you were going to bring up the next point, and I don't want to take it away from you, but you can't disclose that, oh, I shorted it to you, because talk about that part of it. How
So a lot of people, you might ask the question, well, then why don't we require brokers to tell the buyers that, yeah, this was short and you cannot relend it again? And there are a few different answers to that. But let's say you're the short seller. Do you want the buyer to know that you're short? I mean, maybe you don't care for 100 shares or 200 shares. What if you're shorting, 100,000 shares or 50,000 shares or whatever? You probably don't want the buyer to know that you're short. And by the way, if the buyer does know that you're short, he'll have some information that the rest of the market doesn't have. And that's somewhat unfair as well. So there are a lot of reasons why this is such a tough, intractable problem. But I guess people should know that there are a lot of smart people that are working on, different solutions for this. And, sometimes it's interesting to drop onto Twitter once in a while. There's a group of market structure nerds that often discuss these types of things, and they bounce ideas off each other and so on. So it shouldn't blow anyone's mind per se, although it can be a problem in a short squeeze, as we saw with GME.
I was going to say, but again, this just, dispels that, myth there that everybody's doing naked short selling. I mean, Bill, a lot of people in the industry too. I mean, this is low hanging fruit for a regulator. If you're not getting locates on your stocks, this is something they're looking for and something they can easily track and easily fine. And obviously, if you're, doing it to a detriment to the market, you could go to jail for this. I mean, this is like not something that is common to just have naked shorts on. They cracked down on this stuff after the financial crisis. And I tell you, they audit traders, they'll come in there and make sure they have their locates. I keep all my locates. I keep a record of these things on my PC for a prolonged period of time, just in case I get an audit.
For most retail brokers, retail investors, the broker basically does all that legwork for them. But you're right, it's important. It's easy for the regulators to spot, and so it generally doesn't happen.
So last question, we kept you obviously a little bit over time, but we love your analysis here. Take it back to Reddit. I mean, this, obviously is what's caused, this talk of everything. This Reddit, they've got 8 million, people over there now. I look at this and I think, wow, there just looks like, it's disorganized pump and dump to a certain extent. And I've kind of called it that. I mean, let's get together and get this thing higher. I mean, but there's probably some smart people behind some of this stuff as well. I mean, I see a lot of Twitter accounts that are, look to me like pump and dumps as well. And everybody's saying, oh yeah, but this is for the people, the power of the people. But I mean, a lot of this just looks like classic market manipulation. I mean, what are your thoughts here on, the GameStop, obviously the GameStop with Reddit?
Yeah, so it looks like there are at least some people that were involved on Reddit with the GameStop subreddit, the Wall Street, I forget the name of it, but
Wall Street Bets.
Wall Street Bets. Thank you. Yeah. That may have been employed by brokerage firms. Now, let me explain why that's important. So when you go to work for a brokerage firm, you become known as a registered person. What that means is you are obliged to follow much stricter rules than people who aren't. Some of those rules have to do with what constitutes research advice, stock promotion, fraud, and so on. And registered persons prove that they understand the rules by taking certain FINRA tests. They're called the Series 7 and the 24 and the 63. And in this case, as I said, it appears that at least one person involved in this promotion of GME is or was a registered person. Now, there are lots of investigations getting cranked up as we speak to look at what's happening in the case, and we don't know what for sure what the outcome will be. But here's what I know for sure. The SEC and FINRA don't care much whether some misguided politician or editorial writer thinks you're part of a new populism or David versus Goliath movement. They don't care if you have a cool screen names with lots of rocket emojis. What they care about, and what they care about passionately, are the rules. And if they think you're violating those rules, they're going to come at it. And so let me just say one more thing for our viewers. Everyone should be aware of a website that FINRA runs called BrokerCheck. It's free. Anyone can, and you go there and you can look up the history of anyone that you see, and so when the next time you read a gushing article in a newspaper or magazine about someone, maybe the first thing you should do is go to BrokerCheck and take a look at him, look at his background, look at his history, where he's worked, and so on.
That's all. Yeah, great point. BrokerCheck is an invaluable resource. Bill Harts is the former CEO of Modern Markets Initiative. Just blew my mind, changed how I look at markets. Apparently, stocks can be borrowed out infinitely. Yeah. That's good information to know. Bill, thanks for the time today. We appreciate it. That was great. Thank you. Yeah.
Thanks, guys. Thanks for having me.
Thanks, Bill.
Thanks, Bill.
All right. I can't even get over that right there. I didn't know that the loop can go forever. I did not know the loop can go forever.
You learn something every day here on Benzinga's PreMarket Prep.
Yeah, we've been asking for that answer that Bill just gave us for a while, because I was convinced, I highly doubt there's not a lot of naked short selling going on out there. I know there people believe that. Before 2007, I would say yes, 2008, but that all changed after the financial crisis, and they really cracked down on it. So this that's a big word. Rehypothecation of shares is your answer, because that shares can be borrowed and that loop can go on indefinitely, because there's no way that person who bought the shares from you knows you sold it short, so they think they own it outright, so they think I can lend those shares too, and that's how it happens.
Because I remember I had this question like years ago, and then someone was like, no, you can. I for some reason I thought you can lend them at one time, and like that's the end of that loop. Otherwise, you can create this entire secondary market, tertiary market, where you've got this entire this entire market of. I'm thinking about the blackjack scene in The Big Short, where there's the bet on the table, and then there's all the side bets, and like that's what I'm thinking. Oh my goodness, just
that's the way it is. I mean, how you? Okay, let's say you're that buyer, like Bill was just saying. Let's say you're that second buyer. I mean, it's not fair to you that you bought the stock and you can't lend it. It's not fair to you, as I've bought the stock.
I would have thought. I would have thought.
Don't own them outright.
I would have thought the broker would have stepped in and said no. Like I would have.
That's not fair. So if that's the case, then you have to put a little asterisk on every single share that you buy in the open market and say that this is not a lending share. This is a lending share, but this is not a lending share, because there's a lot of institutions that make a lot of money. Everybody says the evil short seller. There's fees involved in short selling stocks.
Huge.
And huge money made by the institutions by lending those stocks. And you, as a retail investor, at Interactive Brokers, you can get into the lending program. People don't realize this. You can go in to their program and lend your shares and get paid for holding your stocks.
Yep.
So those fees can get passed directly to you. I mean, they take a cut, because they're in the business to make some money too. But you can get paid on your shares to lend them out to short sellers like myself.
So
and you can, if your shares are loaned out, you can still sell them. You can still sell them.
Okay. So
wait. You sell them, and then obviously.
Okay, wait. So what if the first person in the chain buys their stock back?
Well, here's the issue. This is why you get, you've got to have. So when you short a stock originally, you've got the borrow, and you can stay short as long as you still have the borrow. If that first person in the chain covers, now you have to cover as well. You get bought in. These are called buy-ins by the brokerage level. I get notice of buy-in all the time where I don't have the borrow. If you're in smaller cap stocks, all of a sudden you don't have a borrow. You get a notice from your broker and says, look, for regulatory compliance here, you have to cover your shares by the close today. They usually at Interactive Brokers give you a 10-minute warning, and then you cover. And if you don't cover it, they will go into your account and buy back the shares themselves. The brokerage can go legally into your account and buy back those shares in the open market at whatever price is there. But they have to do it to stay, because you're now you would then be naked short the stock, and they can't have that because the brokerage doesn't want to get fined. So those are called buy-ins, when you actually have to go in and rebuy the stock. So you have to cover your short. Man. So that first person sells, you got it, and the chain's broken. you then have to cover your short. They'll go try to find you another borrow. And if you can,
I would hope so.
Yeah. And, this is why you don't have a problem with Apple, Amazon,
those
SAP
things.
components. You're going to get borrows and locates. But remember
Easily.
Viacom? Remember VIA?
They locked it up.
Version? Nobody could find the shares to
Yep.
short. The stock exploded
Yep.
because they were all buy-ins. You had the brokerage houses had to buy it back. And here people got on for a spread. The one VIAC versus the VIACA used to be VIA versus VIAB, I think, when this happened.
Yep.
But the one with the voting rights, they couldn't get the borrow on it. So you got pairs traders that, are playing share class arbitrage that are short the one that's $2 higher because they usually stay in line, but it's here. But then the borrow blew it out to here. So these are market mechanics of stuff that's happening obviously in the background. But I mean, as a short seller, I'm always aware if my borrow is easier now, and they're more expensive. I mean, when you get these newer issues, like a Fubo is probably expensive. You got to look at those rates. Because, some of these rates can get over 100% a year. So, when you're paying these kind of rates in the financial crisis, every bank's borrow was like huge money.
Huge, yeah.
Citigroup was like 150% at one time. So, I mean, you've got to be careful with the short sell. You've got to watch that stuff. You've got to watch your borrow rates, and you got to watch what you can get a borrow.
I
You
presume
don't
that
get short squeeze.
I presume that was before they banned shorting the banks or maybe maybe it was after. I don't know. All right. 9:01. That's going to be it for our show today. I learned a lot. I hope you all learned a lot. Smash that like button if you learned something. Even if you didn't learn anything, just hit the like button anyway. I want to thank our guest, Bill Harts. I want to thank all of you in our chats, all the participation. We love you all. We appreciate it. You can always catch our show. It's available as a podcast as well. We're on every major podcast platform. And for those of you listening via podcast, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. That's going to be it. So everyone have a good rest of your day. Joel and I are going to be back at 3:40 p.m. Eastern time to wrap up the session. Good luck in your trades and stay safe.